Okay, well, thank you everyone for sticking around. I guess this is the last panel and we've got a final keynote speaker after this. But my name is Riaz Karamali and I'm a corporate and transactional lawyer at Pillsbury. And we at Pillsbury have been involved in virtual worlds and digital currencies from years before Bitcoin, from the video game days is when we first got into it, and we obviously have tracked it through the last few years as well. And I'm involved in doing financings in different companies and blockchain companies, and also we represent a number of companies in the space. And after we've kind of gotten really into the details and into the weeds today on lots of use cases and lots of the details of what's going on in the industry. For this panel, we're going to go up to a 30,000-foot view and sort of look more at some crystal ball gazing, look at the future, and look at really, is this all hype or is it the next industrial revolution? And we've got a great group here who's going to help us answer these questions. So I'm going to ask each of these gentlemen to take a minute and tell us about themselves and the companies, and then we'll just dive right in.
Hi all, I'm Robert Schwentker. I focus on blockchain and DLT education and project innovation. I recently was running CoinDesk's hackathon last weekend, and I ran a hackathon for a new role I have at UN Women in Oslo, Norway, and some cryptocurrency workshops recently in Saudi Arabia, including the Princess Noura University, which is the largest women's university in the world. So I travel around and work with government, well, more universities and businesses on blockchain education.
Hi, my name is Naveed Sherwani. I'm president and CEO of Peernova. Peernova is a company which is probably the only company in the world which has a production blockchain-based software. We have real customers with real revenue, which works in real banks today. And our system, what it does today, is it's a payment authentication system. And it is used for very large banks where you have gigantic volumes of payment going through the system, millions of transactions kind of a volume. And we generally work in the area of audit, compliance, and payment processing. So that's what Peernova does.
Thank you. My name is Brett Noyes. I'm the founder and director of Unbank Ventures. I work with early stage FinTech companies that are probably pre-seed to A stage. We've had 2 cohorts and going on our 3rd here in the fall. Yep. And we have an interest in blockchain, but not a dedicated focus on it.
Thank you. I'm Scott Robinson. I'm the founder and VP of Plug and Play FinTech. If you've heard of Plug and Play, we've been investors in PayPal, Lending Club, Dropbox, and about 650 other companies. I work with about 33 banks. Our general FinTech activities stemmed from a Bitcoin accelerator program I started, and actually Robert helped us out quite a few times as a mentor, and we looked at your company very early days, much different company at that time. But we've made about 12 blockchain investments, and I got into the space by working with a guy named Roger Ver and taking over the Bitcoin meetup in the Valley. So if you're ever down south, come join us.
So Scott, hold on to the mic, and let me launch with you. So is the blockchain all hype, or is it the next industrial revolution?
So I think this is a very common question. Is this thing for real? I'd say the week we spent in New York last week really, for me, solidified, yes, this is a real thing. And this is on the premise of probably 3 theses I've put together. One, the assumption that in the future there will be a requirement for machine-to-machine value transfer. Number 2, we have an ongoing problem with transparency, audit, as well as truth. And number 3, there are a lot of very inconvenient, very inconsistent, and very ineffective processes in place right now as a result of the 2 prior. So I think, yes, blockchain is here to stay. The way I've always described it is, where do you have trust issues? Because that's probably where blockchain will be most valuable.
Okay, we have a true believer on that side. Next guy.
I mean, that's a very tough one to follow, very intelligent answer, so mine's not going to be nearly as well thought out here. I honestly think it's both. Not to be contrarian, it's just that it's, as you're in Silicon Valley and as you're, at a barbecue this weekend and your friends from Eastern Washington are talking about Bitcoin and getting in on this Ethereum thing, you think it's probably a lot of hype, right? It's probably overblown, but it doesn't mean that it's not valid, and it doesn't mean that it doesn't have a great future. So Honestly, I think it's probably inflated, but it doesn't mean that it's not also going to be great.
So I've been working on it for 4 years. We have invested over $30 million. We have a very large team. What we have found out is the blockchain contribution to a solution, to any particular solution, is probably less than 10%. 90% is the real problem. Problem with blockchain is most of the people who are trying to solve the problem know only 10%. They don't know the 90%. Because we don't have people who are on the verticals who came into the blockchain saying, I am going to use the blockchain. What we had was a whole bunch of technology experts who got excited about blockchain, said, I am going to go solve a problem. Well, that means they have to climb a hill of 90% to understand the problem, right? So I think that has caused us the most amount of pain in my life. How to understand the problem. Some of our clients, in last 3 years, we have met them 150 times. Imagine doing 150 meetings with a client just to understand the problem. That should tell you something, the daunting task that you have in front of you, because the problems we are solving are very complex. When somebody tells me I'm going to do loans, I ask them, okay, how many loans have you processed in your life? Just doing the something loan thing, it's a problem that will take 3-4 years to understand and solve. So is it a hype or is it an industrial revolution? I would simply say it has a lot of potential. But I think the potential will be realized when we get real. And right now, when I see a lot of the companies, I don't see real. I see them, technologies who are excited about a technology, and I look at their headcount and how many people really know the problem in that, not very deep. So I'm excited about a lot of opportunity, but we have to get our head straight.
Hang on to that for a second, Naveed. So it was great that you talked about you've got real revenues for a real bank or banks, and you're growing. But we were talking before the panel, and you mentioned that I'm not sure that you're really on the blockchain in your company. I mean, you're not really using what the rest of this conference would consider is the blockchain. Is that true? Or
Yeah, so I think we abandoned blockchain, the Bitcoin blockchain, 3 years ago. The reason is because when we realized that we have to run 1 million transactions in fraction of a millisecond over gigantic petabyte databases, Bitcoin blockchain cannot do anything like that. Second thing we realized is that the Bitcoin blockchain looks for consensus, meaning trust between infinite number of parties. In real world, that's not necessary. In real world, there are only 2 parties, or 3 parties, or 10 parties. Creating trust between 10 parties is infinitely cheaper and economical as compared to creating trust among n parties. So we solved that problem, patented it. And so we solved that, focused on that problem. Second thing we found out also is that the depth of the problem is daunting, as I said earlier, and that preoccupied us over a very long period of time.
So we've got a true believer, and we have a couple of skeptics. Where do you sit, Robert?
So I think we should just acknowledge the fact that Bitcoin is $30 billion, it's open source code, transactions are unencrypted on the internet, and it's never been significantly hacked, and it's on a global computer this greater than the world's supercomputers combined, like times 13,000. So it's a massively interesting technology. Whether it'll be around in 10 or 20 years or whether it look like, AOL mail or something is maybe a different question. But the power of the technology is really something I think that we ought all agree on. The potential of it is what we're trying to find the trends to see. I see when you have machine-to-machine payments, when you have artificial intelligence and virtual reality, artificial reality, all of these things, becoming this next layer of the internet, if you will, with quantum computing backing it and such. So I think it's the beginning of a trend of a whole set of plumbing, which will take 5 to 10 years to evolve, and then we'll see many sorts of apps and applications, some decentralized, some combinations of centralized and centralized.
Okay, well, that actually leads into my next question, and any of you who are interested. You mentioned 5 to 10 years. And the question is, how long might it take for mass adoption to happen on the enterprise, government, and consumer levels? Scott, do you want to speak to that?
So I think, just to echo both of your statements, I've seen just in the last question, a lot of startups saying we're going to build critical mass in the Bitcoin blockchain space, and then we'll go solve a problem. But to your question, let's think back to how long it took the internet to actually become a commercial product that we use and recognize. Out of the ARPA program in the 1960s, it took probably 30 years worth of production of other use cases for something like an @ symbol or the concept of www to actually be displayed for a way for us to understand, a commoner to understand this is how I can access information. Let alone the fact that it took however many minutes to download a 1.4 megabyte picture in 1993, and then 1996 was finally when we had an actual consumer-facing use case with something like flowers being delivered or pizza being ordered online. So with that being said, we looked at the Bitcoin and blockchain ecosystem, which is fresh off of all of its 8 years or 9 years of existence. Not that much capital has been deployed comparative to what I'm seeing in general financial services. So we still have a long tail behind us. This is a Pandora's box. And I think to set the expectation that in the next 3 years we're going to see a blockchain in the wild that's solving all of our problems, absolutely not. We will see things that are probably the least moated and have the highest delta of problem as it comes to trust. So documents as it relates to identity or compliance or audit solutions, things that don't inherently take custody of a large asset or funds, but more importantly, paint a picture of what the core offering is for blockchain, and that's trust with the data. What is the purpose of a solution that, when you have 7 to 9 transactions per second on something like Bitcoin, sure, it doesn't make sense to be used right now as a currency, but the value might be something more close to stay of value. So for example, we did not see this in Greece, but we do expect this in the near future. A lot of ways that Bitcoin can be leveraged at this point is just a domestic Forex exchange. And that's a use case we wouldn't have expected here in the US, right? You're not gonna use Bitcoin at your Whole Foods down the street to buy your organic bananas. You're going to use this to mitigate against an M1 currency that may have lost its entire value twice over the past 20 years like we've seen in Argentina. So is it here? How long will it take? Great questions. I probably wouldn't be sitting up here if I knew, but the reality is the activity is occurring across markets and industries. And I can say that because we work with about 160 F1000s, and I have now seen the core request for blockchain-like solutions from financial services into insurance and now health, and I've seen it now kind of taper into other industries. So my guess would be, yeah, we're 5 years from a smart contract, really simple solution in market. There is a killer app that just hit the market, and that's the ICO space. So more on that later.
That's the what?
Initial coin offering.
The ICOs, yeah, we've talked about that a little bit.
And I learned today that's a bad word, so we don't say that on stage. So, I generally agree with Scott, and I think he's got, way deeper knowledge on the subject than I do. From my world of working with fintechs at the really early stage, I think there's a lot of lip service and there's a lot of behind the doors type of stuff. I would speculate before we see it really in mainstream and global financial institutions, it'll be 20 years. Doesn't mean there's not a lot of cool stuff to come out between now and then that are, I think the ones that are going to win kind of in the venture world are going to be things that can stand alone and don't rely on financial institutions. I think that we're going to see the greater, to Scott's point, kind of the early winners will be in smart contracts and logistics, and they'll be doing a lot of stuff that doesn't touch banking. And I think that's going to be really the validating, and that's going to kind of bring it into the mainstream. But fintech will always have its challenges, and honestly, I'm not sure that we're probably not ready, and regulators are not ready to bring blockchain to the mainstream yet.
Okay, so it seems that in the last couple of years, the degree of
Can I take that last question also?
Sure.
Yeah, so I would say that probably the blockchain as it exists today will not survive. I think it will fork off into many different shapes and forms, and it will take the shapes and forms which fit the problem. And I think this is my expectation that in the next 3 to 5 years, we'll see some blockchains which will create trust between 2, 5, 10 small number of people, and very efficient, very fast. And then there will be blockchains that are medium range. There are blockchains which are private. There are blockchains which are... So I don't see one blockchain.
But are you saying the Bitcoin's not going to survive, Naveed?
Well, that's a different topic altogether. I think Bitcoin has really nothing to do with blockchain. I think so. Because I think it's a currency.
Blockchain is the foundation of Bitcoin, right?
Yeah, but Bitcoin could have been done in a different way too. The concept of Bitcoin could have been done independent of blockchain. It's just so happened that we use the blockchain technology for Bitcoin. Bitcoin itself is a very interesting idea, right? But it doesn't necessarily need blockchain. There are other possible technologies which can create a decentralized system for validating transactions. Then we could have used them too, right? But my point is, that's a different debate. We are talking about blockchain. My thought process of blockchain is that various different industries and use cases are going to need various different shapes and forms of blockchain. And I think we will probably see that evolution in that direction.
You have something to add to this debate? Okay, so what I wanted to get to next is that it seems to me that in the last couple of years, the degree of enthusiasm about the future of blockchain is directly proportionate to the price of Bitcoin. I mean, look at what's happened the last week or 10 days, and you can see that. And I guess the question is, we'll put aside whether that's healthy or not, but the question is it a given that mass adoption of these technologies of Bitcoin, Ethereum, and other coin-based applications will be accompanied by a steep rise in the price of cryptocurrencies? Because that's what people seem to assume, but is that necessarily so? And do you all have any opinions on that?
Well, if you look at today, there's about $75 billion of market cap of all the cryptocurrencies and tokens. There's over 1,000 cryptocurrencies, probably 100 kind of being used, about a third of those as tokens as opposed to coins. So just a distinction with the coin is like Bitcoin, it's money to be used for exchange of value, whereas Ethereum has Ether, which is used to power the network. So when we talk about initial coin offerings, it's also token sales. And in the last panel, they were referring to this crowdfunding, using a novel like Bitcoin token to create new applications. So I think there's a massive rise in this. We've seen like since the beginning of the year, it was probably the market cap was somewhere around 30 billion or so. Now it's 80 billion. So certainly there's some amount of hype. People are building up tokens, but I think like the last panel exemplified, there are some very interesting use cases coming out. The BAT token, is on sale tomorrow, in fact. So get your BAT tokens for the basic attention token. That's Brendan Eich, who created JavaScript, who's put that together with some other his colleagues. So I think we're somewhat on a hype cycle, but many interesting and real things are getting created along the way.
Certainly touch on this because I've seen the proportionate value of Bitcoin in attendance at my meetup. So over the past 3 years, we've held this meetup in Silicon Valley pretty much every Tuesday night for the first couple of years. And yes, right after the Mt. Gox thing, we saw a huge dip. And I think a couple observations just generally on where we've seen adoption of Bitcoin. So if you trace back kind of the value and what that meant for sentiment for both the consumer versus, say, a vendor, right at the very initial, I'd say initial big peak, which was $1 to $30. A lot of folks were excited in the engineering space. So all of a sudden, basically, what was it now? 4 years ago was the first conference in San Jose. Then we saw the second peak that was up to about $263. And the trend has always been consistent. It's kind of been a seesaw in the sense that like consumers are picking up on one end and then vendors are excited about it. And as the vendors start to accept Bitcoin and this novelty transaction occurs, they flood the market so the price dips. So we actually see a dip in price when large vendors picked up because they would push and immediately want to cash out, against the risk of any volatility. Vinnie Lingham very recently, as of about, I think, a year ago, was describing these two trends and what that meant for the value of the price. And I think if we apply the same things he was describing, where we had an increased vector for those on the consumer side accepting, and then retailers at the same time picking up in places like Japan and elsewhere where we've seen some of the regulatory changes, we're watching the same thing happen to Ethereum now. And the value is, for Ethereum, is you need Ethereum to buy an ICO offering, generally. And so we've seen the price of Ethereum just in the past 3 weeks go from something like $20, $30 up to now north of 200.
Yeah,
so
it's gone parabolic. It's crazy. So in a way, it does seem that if you're a believer in sort of mass adoption of smart contracts based on Ethereum, then investing in Ethereum itself is a good bet. That's what I'm hearing.
So actually, in our ecosystem where we work with large banks on the problems, there is no discussion of Bitcoin. There is no discussion of value of Bitcoin. There is no discussion anything like that. We only discuss the problem that we are solving and the technology that we are developing. So in those discussions, there is no Bitcoin.
Okay. Right?
To round it out, I'd say personally, I'm long on blockchain technology and kind of short on, the other. So Bitcoin and the underlying currencies. But I mean, that's just because I feel like I don't understand the underlying asset, and it just, for me, I don't understand it well enough to play in that space. I think the smarter guys on the panel could play there. I'm going to play in a different space.
Okay. So let's assume we're on the way to the blockchain revolution. What might go wrong along the way? What do we need to watch out for where things could really sidetrack us here?
I think the next important thing we have to do to make this into a revolution is to get the right people into the field. We are not attracting the right people. I go visit companies after companies after companies. This company says, I'm going to do real estate. Well, how many people know anything about real estate in that company? Many times, zero. This company says, I want to do something about loans. How many people know anything about loans in that company? Zero. I think, first of all, if you want to make this a revolution, the first thing we have to do, it starts with VCs, it starts with boards, it starts with founders. We have to people who know the problem that we are solving into the companies. And I think that would be the first step that we need to take to make that into revolution. So what can go wrong? Exactly that. Unless we can change that trend, unless we have whatever 500 companies we have, bunch of technologies who want to solve a problem but have no real content understanding of the problem, I think that is the biggest risk.
So you're saying too many technologists, not enough domain experts. Do you agree with that, Scott, in terms of what you guys have been seeing?
I think, originally, yes, this was generally a problem when we were investing. We would see a lot of folks that would say, hey, I'm going to solve the remittance problem in the Philippines. And we'd ask the question, have you ever been to Jakarta or Philippines or anywhere else close to that, right? Where there's a very similar problem. The answer would be, no, we haven't. Actually, we should go book a flight to Manila and figure out what's going on. So yes, there's a lot of folks that feel as though they can stick a blockchain Band-Aid on whatever the problem might be. And one of our litmus tests for when we look at a startup that's saying that they're working on blockchain solutions is, number one, what is the latency requirement? Number two, do you have a multitude of competing interests? These are big questions that are very important. And three, with that latency and so forth, how public does this information need to be? So we apply a lot of these questions to why you would actually leverage a blockchain solution. I think, look, the reality is blockchain is in its very early stages, and the type of talent that first came to the market is the very same type of talent that came out to California in 1848 and struck gold. It's a risk taker, it's probably something near nefarious activity, and by golly, they see dollars, so they're just going to move quick and ask questions later. And over time, we've now seen that shift. So folks like Blythe Masters and others that come from a clip that I'd say are cut from a different cloth, know the domain, know the industry very well. That's the type of talent I'm seeing walking into the space. And a great example of that is Tom Jessup, who was working at Goldman Sachs for pretty much his entire career. Jumped ship, now working with Chain, Adam Ludman's project that has raised $30 million from 10 different strategics. So yes, there's a lot of screwy stuff in Bitcoin and blockchain. You can always tell when there's a Bitcoin meetup because a certain type of crowd walks through plug and play. But the reality is to your point, does this actually solve a problem? That's the big question that we always have to ask. Does it matter if it's TCP, IP, blockchain, whatever technology stack? No. But if you're leveraging it, what is the delta compared to what the other solutions are, and why is that valuable to your pitch?
Fair enough. Other thoughts, Robert?
Well, to Naveed's point, there's sort of an educational piece, and I think we're seeing an engineer who also has qualities of economists and understands some about law and has game theory and cryptography and such. So I think we're starting to see a more rounded type of engineer, and that's interesting. And lack of those people, I think, makes things complicated in this space. If a startup is doing sort of a token offering, they have to understand how that affects the economy of their own organization versus all these other organizations. Legislation, I think, was talked a lot about, and regulation and such on the last panel, so I think that's certainly a factor, and they addressed it pretty well.
Yep. Brett, any thoughts on this? Okay. Well, you go ahead.
I don't know. I mean, I don't have any grand vision on it. I work at the earliest stage of all of this, so hopefully I'll be pumping through some stuff through the ecosystem that has value that could be approved by these guys. So we'll get their checkbox, but no idea, what the big hurdles are in the future.
Okay, so I'd love to include the audience in this conversation. So if folks have questions, we'll make it more interactive and get you guys involved. Any questions? Oh, there's one, okay.
I wanted to go back to kind of the title of this and to some of the risks. And I mean, this isn't really, it's some of the cryptocurrencies, it's not purely an academic debate, particularly in places like the emerging markets where you have lots of currency volatility and individual investors are trying to find liquid safe haven. It seems there's a lot of emotional investing going on. And you don't get a liquidity shock. If Bitcoin plunged to zero, that wouldn't be a liquidity shock. You get a liquidity shock when people don't know how to value what's in their portfolios. And if people don't understand the underlying technology, it would seem that that might be a big risk. So my specific question is, where do you see a lot of the crowding, a lot of the congestion risk in the market as it stands, or do you not think it's a problem yet?
The problem is as you said, is there a crowding problem?
Where do you see froth at the moment?
Well, I mean, you look at the price of ether, right? I mean, isn't that froth? So I mean, we'll see what happens with it. But I mean, I think that's indication of froth.
Ripple's XRP was trading at below a penny for months and months and months, and now it's at 40 cents, interestingly.
Yeah, I think maybe a different way to answer your question is, we looked at a couple surveys before we opened up our Jakarta office, and the question that we asked a lot of the demographics there was, are you connected to the internet? And the answer would be no. And then the second question would be, do you use Facebook? And the answer would be yes. And I think at the core of that question is what we're describing here is UI and the use case that is probably most relevant for that market is not being conveyed correctly. There's a big discrepancy between the education and the value proposition of what this offers compared to how easy it is to use. So that is one big challenge. And I think on the frothy side, because of what we're seeing with the lack of friction for any startup to raise money so quickly, the question will always come back to is this a business interest, and does this relate to the 1933 securities fraud law? And I think that's where there's so much of a vacuum at this moment for which we've seen success, yet we haven't seen kind of the legacy or the latent response from the typical government agency, which will cut off the head of one individual, put them up on a stick, and kind of point to them and say, this is what's going to happen if you do this. So I think we can expect that that's coming. Part of, I think, what we're seeing in the price right now is folks getting really excited about the ability to basically get in like they should have with the Oculus crowdsourced rounds that went through, and they're hoping for that $1 billion exit. But the reality is we don't know where this is headed. We do know that a lot of the folks, and I've been to the Department of Treasury and I've given testimony for this specifically. There is a challenge right now in reconciling what folks believe to be software and others to actually, something that fits within their paradigm. And some way in between, the U.S. is very influential, and there will be a response. When, how, I'm not sure, but there's an indefinite time period for something like this. This is not a 5-year law.
I bought my Bitcoins at $1,150, sold them at $475. And that was my exit from the Bitcoins about 2 years ago. So that was my experience of frothiness the last time.
Okay, other questions? Go ahead.
Hi, we've talked a lot about the how, the when. My question goes to the where, and I think it's been alluded to a couple of times, but where do we see this revolution, the potential revolution taking place? Where do the political will, the friendly regulations, and the technological know-how all intersect globally?
Okay. How will we know when we're there?
China announced last year that they would be creating a cryptocurrency. When governments start to do that and they take hold, I think we're there. I think that's probably 3 to 5 years out.
I think there are certain areas where there is no regulation issues, and I think those are areas. I think in IoT, when you have to create trust between machine to machine, things like that, I think those are the things that can proceed faster. I think financial markets are going to be slower because there's a regulatory risk. But I think there are many applications and use cases for variants of blockchain technology, which I expect to see in next 3 to 5 years. Financial markets may take longer.
Yeah, I'd speculate financial markets will be last, in spite of that being the space I play in. I think it's probably going to be logistics. I think there's real use cases that can be solved. As to where, I think my friend and colleague who was on the previous panel, Jack Saba, has some really good insight. He's looking at Papua New Guinea and the world as a whole, so I'd say ask him afterwards.
And I can just speak to some of the government agencies that I work with. So, number one, we just saw in Japan a new change in the virtual currency laws there. So, 260,000 retail locations went live overnight. There's no VAT tax. Australia's next, so July 1st, that'll happen out in Australia. Meanwhile, we've seen call for comments in India. There's a lot of sentiment changing there. Same concept in Russia. So, generally speaking, when you look across the world, I think. And a lot of my friends would agree, in the very beginning days of Bitcoin, we never really saw this as being something that, again, you're going to use as a novelty item at Whole Foods. This is how you solve corrupt governments, corrupt financial institutions, corrupt problems that really impact the world. And when we consider there's 2.5 billion people in this world that are underbanked, not just unbanked, but underbanked, the question was always, how could you trust? Who would you trust, and why would you trust them? So I think there's a big shift in sentiment as it relates to technology on the device, perhaps exhibited by that concept between Facebook or internet. This is a mainstream instrument now in many of the different same markets that don't have extended financial services. So, places like Indonesia or elsewhere, I think the Philippines is a particularly interesting market for corruption within the actual government. 2 years ago, I was working with 3 different parties that were meant to audit the voting process. And so there were fear of voting a particular way and being killed, basically, in response. And so one of the thoughts was, how could we create a blockchain-like based voting solution, which is now popping up all over the world. But the point is that the value proposition is most significant where the greatest delta of problems occur. And where that is not the United States and the first world markets. And it's not about us being able to send Bitcoin to grandma. It's about us being able to store the value against a very volatile and often life-changing event that can change the currency that we live and die by. And a lot of these folks, unfortunately, never were extended anything. They have no alternative. And so when something on a phone comes by and it solves a big problem for them, I don't think they're going to care if it's Bitcoin, blockchain, Ethereum, whatever. If it solves that problem, they're going to use it. And that's I think, what we're all betting on. Is this is something that's now technically available. The question is, how is it messaged and then distributed?
Thanks again for all your information, Scott. That was great. Because I thought about, how can it be applied to elections? So that's really interesting that you said that. And earlier, a panelist said that Bitcoin relies upon consensus. So I apologize. I want to ask the same question of this panel that I asked earlier. And 2 things. I want to back up just real quick. I don't know if you guys heard of what happened in Bolivia recently, where they're arresting people for even mentioning the word Bitcoin. So. Because I think it's a methodology for extracting family wealth. So anyway, besides that, my question for you that I also asked earlier is about the idea of patenting blockchain. I'd like your thoughts on that.
Well, everything we do, we have patented. And so these are basically variants of blockchain that are necessary in our business. So we have patents on those. And we think that is necessary for creating the value in our business.
I don't have a strong thesis on it, but I do have an investment in a blockchain-based company that presented today. So we're looking at patents for some of the technology, and for it to be, defensible, we need them.
I think there's a few ways to answer that question. One, dating back 4 years now, there was a project called Bitcoin J, and Mike Hearn was working on this back when he was building Lighthouse, which was actually the first crowdsourcing solution that was meant to be, here's how you deploy Bitcoin and you can have a stake in one of these projects. So the question always was about who owns that IP and do we push it open source, given an MIT license and so forth. And it ended up not really being a problem from the IP perspective. A lot of people really needed it at the moment. One of my portfolio companies needed it at the moment. So it was just open source, no issue whatsoever. But I think to the point of some of the other folks that we've heard today, I've seen rampant patent trolls going through filing left and right. So over the past 3 years, we've probably seen maybe 100 very significant patents filed by F100 brand names that you know. I think on the flip side, and here's a very interesting thought experiment to leave you with, is what happens when a decentralized autonomous organization, a computing algorithm, creates its own IP, and it's meant to create an IP with a second DAO? Who owns that and how do you license it? So that's one of the big questions we're going to ask in the next 20 years as AI intersects with a lot of this is, who are the parts that actually make up what IP is as it's defined and we understand it right now? Because there could be 27 lines of code from one DAO and only 3 from the other. That's a big question I think a lot of people are going to ask, is what happens when that kind of IP is used across a very collaborative environment. So things I think about after a couple scotches every night, but it's a very interesting time, and I think, yeah, there's a lot of activity. This is a wide open ocean, so if there's entrepreneurs here, keep going after it. So thank you all.
Yeah, hi there. I just want to know is, like, being a startup, the reality is, like, obviously the importance of investment, you know, having the cash to maintain what you really want to build up. Now, you are looking into a space where a lot of white paper going for ICOs is building up a lot of money. Do I need to wait to develop a prototype, to get into a first stage of my product in order to get money? The reason is, well, if I wait so much, maybe what my value that I can add now with the money that I can receive now is going to be different. So what is your thought process of when should I actually go for investment?
I mean, I think it depends if you're asking about going for an ICO investment or just going for the traditional investment. Okay, well, so I'm the attorney on the panel. So I would say there are a lot of good reasons to go the traditional route, even though it is going to be slower and you're going to have to do more work. People are going to do more diligence on you. But in addition to the legal risks that Scott mentioned, there are ways to deal with the U.S. crowdfunding rules and to kind of go abroad. And there are ways to do it legally where arguably you can do an ICO and hopefully do it legitimately and not have the SEC come after you. But at the end of the day, you're going to have thousands of investors that you don't know and who are not going to add any value, who are just going to give you some money and then not add any value and then potentially be pretty pissed off if things don't turn out. And is that, so number one, is that the right investor base? And number two, after you've done that, are you going to be able to get any kind of traditional venture capital or private equity? And those are the big questions. And we're thinking the answers to those are probably not. So probably no. So you kind of really limit yourself. I mean, so the way I view it, it's still kind of a worst case scenario. It's sort of the last resort if other things aren't making sense. Then maybe check that out. But otherwise, stick to the sort of tried and true Silicon Valley method. I mean, that's sort of how I would view it.
So, advice on raising money, keep on raising money all the time. So most people make a mistake that they stop raising the money. I think if you are an entrepreneur, what I do is that as soon as you finish one round, start on the second one. Finish that one, start on the second one. Because
But you're not doing crowdfunding either.
no, he said that I'm answering the question for the traditional one. So in the traditional one, I think that is my best advice, is that be in a fundraising mode all the time. And the stages change, the number of people you're reaching out to that change, but the effort of the CEO should be always 30 to 50% raise the money.
This may be the first time I've ever said this, and maybe it means I'm getting a little wiser, but I'm going to agree with the attorney.
I think you brought up a very good point there. Number one, what's the value you're getting out of the ICO? In this case, it's pure cash or pure capital. So there's a lot of value that comes with your first few investments, particularly those that open doors in your business development pipeline. So arguably, I'd say from my perspective, and I write checks up to about $500,000, let the ICO come to you when it's your last resort and you're ace in the hole. We don't know what this means. We don't know what's going to happen in the next 2 years. Something probably will happen. But again, strategic money from those that can open doors for you is the most important thing that you can do in your seed round.
Well, thank you very much. Please give me a hand to our panel. Thank you.